There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Yes, we are glad to be back. Welcome out to the Trading Justice podcast. Host Matt Justice, my co-host Tim Justice. And Tim, I got to say, Jacob Pelly, you guys know Jake Pelly, right?
Yeah.
Yeah, Steve, you know Jake as well, correct?
I know of him. I've never spoken to him before.
Okay. Jake listened to the podcast last night, and literally about 1 o'clock in the morning my time, Jake says, hey, Matt, the lead singer of AC/DC was Bon Scott and Brian Johnson. So I just want to throw that out there, Tim. Was not. It has been confirmed that it is not Axl Rose. That is the lead singer of AC/DC. So Jake Pelly, thank you so much for that. Jake's going to be a guest on our podcast probably tomorrow, actually, talking about his journey as a trader. But Tim, how you doing today, buddy?
First of all, none of those guys are David Bowie, so it doesn't matter.
You have been watching that stupid HBO. Is it on? No, it's Showtime, right? Is it Showtime?
Yeah.
That special on the Stardust. I'm not saying he's not a great singer. I'm saying I watched that and I was like, he's a weird SOB.
Well, I mean, that's what a rock star is all about, right? And think about every really good trader you know. Most of them have some kind of idiosyncrasy to them. I think most unique human beings do. So I love it about Bowie. I've always loved Bowie ever since way back in the day. But I talk about,
honestly, I did not know. You can make fun of me for this, but I did not know Bowie went away for that long. I didn't. I mean, it was like 2 decades, that he just kind of said, all right, I'm done. I'm gone. I'm going away. I'm going to live my life, and just a normal life and whatnot. So I actually thought that if you guys want to check it out, I believe it's on Showtime. It's the David Bowie story about his early 70s, mid-70s type. Is it Stardust, right?
Yeah, well, Ziggy Stardust, some of the albums he put out then. But, it's interesting about that, Matt. I think we're so used to celebrities trying to just capture every bit of limelight they have, like the Kardashian-type instincts. So when an artist or somebody who's on top just decides to kind of back off and hang it up, I think it makes us very curious about that. Robert Redford might be somewhat of an example. I think that guy could have done about 30 more movies and made... and been the headliner, and he didn't really take a lot of roles that he was offered.
Yeah, I agree with that. I remember watching Robert Redford. He's been an icon, obviously, but one of my favorite movies with him was with Brad Pitt called Spy Game, and love that movie. I've seen it probably. It's one of the movies I used to fall asleep to, But you got a special guest here, Tim. I want you to introduce Steve.
I sure do. This, by the way, anybody out there listening in podcast land, we've had this, I think, is our 18th, right, Matt?
Yeah, this is 1/8.
We have a very different style from podcast to podcast. It just really depends on the nature of the group. I found, Matt, that even our dynamic between each other changes when we bring a third person in. I don't know if you listen back and you've noticed some of that. I don't know why that is, but it is. And
we're more civil.
Right.
We're more reverent.
I am most... And this is nothing against anybody else, but I am most excited for our podcast today, as I've been since we started this whole process. A good friend of mine and a trader who I respect and a person I really, really like. Steve Huang is with us. Steve, you already said something a little bit earlier, but why don't you say hello to everybody?
Hey, guys. Welcome, and thanks for having me.
Now, let me give you guys a little background on Steve. I've known Steve since 2009, is it, Steve, or 10?
2010.
10. And Steve came out to Salt Lake City and sat in my office for 3 days. We actually sat in the office at the Sheraton hotel room one time and did our mentoring. And where was the other one at, Steve? I can't even remember now.
The other one was right across the Utah Jazz's stadium in your old office.
That's right, down at the Union Pacific building. If anybody's never been to Salt Lake City, there's 2 old railroad stations down on 400 West, and the old railroads are a historic part of Utah. But yeah, that was a fun 3 days as well. And I've known Steve, and I've stayed in contact with Steve, and I'd even say, Steve and I have become pretty good buddies. We both have a love for the Bears and deep dish Chicago pizza.
I feel bad for both of you right now.
And Steve joined the ranks of fatherhood here recently, Matt.
Congratulations, Steve. You got a little baby it's your first baby, correct?
First one.
Oh,
and
wow.
Thanks so much. He's such a cute little guy.
Steve, whenever I travel around the U.S. Teaching, I always ask people how many kids they have. And the reason I do it is because I always talk about stock personalities, cycles in a stock. And I said, how many kids does everybody have? And typically it's 1 or 2, sometimes 3. I always tell the joke. I don't know if it's funny or not, but it's always funny to me. I say, hey, guys, you guys got to come to Utah. Just by coming, we give you another kid.
Pick one up on the way out.
Oh yeah, just you get into the airport. There's one at the door. Just you get to pick your poison. Boy or girl. That's how we get down here in Utah. But it's a congratulations, Steve. I'm sure you're enjoying the sleepless nights and the stress and the wonderment of fatherhood.
Oh, thanks a lot. It's funny because whenever I saw newborn kids before in the past, and it's funny, I never thought they were cute at all. That you look at them, they look all wrinkly, kind of pruny. It's just kind of like, all right, fine.
Until it's yours, right?
Yeah, and then it's mine, and it comes out, and boy, it's such a wild thing. I looked at the kid, he looks a little bit like me, and you see him kind of mimicking the things that you're doing, and it's just the cutest thing in the world.
Oh, it's
incredible.
It changes you when you have a kid of your own. You're like, oh my goodness, these things are the most precious, amazing, beautiful things. And then they grow up, and you're like, please, please, please stop. Then they get 16, and you're like, what the hell did I do wrong? So enjoy it while it lasts. You got about 2 years before the terrible twos, and then you got a great 4 to 5 stage, and then it's like, where does all my money go?
One great thing to just kind of take this back to trading and investing in the mindset a little bit. When you have kids and you work in money or around money or in markets, from an early age with them that you're going to be able to teach them about how really money does work. And you can show them how to trade. You can explain how, all of this stuff works. Matt, I know you've got how old is Tanya? 14 years old?
Tanya's 12. You should know that. He's your nephew.
Yeah,
anyway. And you and I are relatively close, I would say.
He's getting pretty tall.
We were out house hunting up there the other day, right? And there was this real estate agent that was walking us around. He had his 15-year-old son. And the real estate agent looks at my son, Tanya, and says, hey, how old are you, 16, 17? How old are you? And Tanya says, I'm 12. And the guy literally, he was a little eccentric, the real estate agent. He literally just took a step back, threw his hands in the air, and says, no way. And Tan's like, yeah, 12. He's a big boy, man. He's probably only a couple inches. He might be as tall as you right now. He's getting there.
I think that was a knock on me being short. I don't know how that came
out.
We're having a nice little conversation here, and you got to make me realize I'm not as tall as you.
Listen, it's my right as the older brother to put you in your place every now and then.
We have deep-seated psychological,
we're batshit nuts,
Steve.
The only difference between us and anybody else, we have embraced and accepted the fact that we are not, the typical individual out there.
Yeah.
Yeah. So that was the nicest way I could put it.
Another conversation for another time. I do want to get Steve in here because that's actually why we're here today. It's Saturday morning. It's the 16th of August, 2014. And Steve, we just had expiration yesterday. In fact, Gino, Matt, and myself, we hung out and talked a little bit about Expiration Friday and trading. I want to go back and go a little bit through your history as a trader and how you've evolved. Let me just ask you just a simple question. What got you interested in markets in the first place?
Oh, it's a funny story. So I wasn't all that interested. I had done the typical buy stocks and hold them and just hope and pray that they go up. And if they don't, then, oh, well, you lost some money. And what had happened was my girlfriend, who is now my wife, at the time, back in 2010, saw an ad for Tigrant, which is now Rich Dad. and she was looking for ways to generate some more income, and she asked me if I wanted to go with her. And I remember I had the worst attitude. I thought I knew everything, so in my head I thought, well, that sounds kind of cute. Okay, fine, I'll go. And I went with her. From that class on, I was hooked. I learned about options. I didn't know what a call was. I didn't know what a put was. When I learned what they were, my mind went to another level. And then I learned about selling puts, selling calls, and all that just immediately hooked me. And that's what got me interested.
Yeah. So now this is the evolution of a trader. So at first, you go to your first class and you hear terms you've never heard before. You know, looking back, and this may help some of our newer traders out there, Steve, looking back from now till then, it's been 4.5 years, right?
Yeah.
How little, now that you know a lot about trading, how little did you actually know when you started?
Well, I think I still have a long way to go, but compared to back then, I would say if you want to say 10 is like Warren Buffett, 1 is like a novice, I was probably like 0.8 or 0.7.
Yeah, you know,
I
Steve,
realize now I knew absolutely nothing.
It's interesting you say that because it's something I deal with almost every week. People come into my rooms and I'll always ask how much experience does everybody have, and you have a lot of people that have 401ks and some that have traded stock and whatnot. And every now and then I'll get somebody that says, I'll do the same scale, 1 to 10, 1 you know nothing, 10 you're the wizard, and I'll say, how well do you understand the financial markets? And I'll have most of the people say 1 to 2, and then you'll have that 1 to 2 people in the room that will say, I'm a 7, I'm an 8. And then I'll ask, well, how well do you understand options? And they'll say, oh, I'm a 9. How well do you understand technical analysis? Oh, I'm a 9. And I just smirk. I just absolutely smirk. And I'm like, oh, I'm going to have fun with you guys this week. Just completely overwhelm you guys with definitions and whatnot. But, I think that's the same journey for every one of us. We started in 2005, you started in 2010. And looking back in 2005, I remember sitting down with an individual talking about trading, and he was with the company back then, and basically he was asking me all these questions, and I didn't know a thing. I didn't know what a call was. I didn't know how to short stock. I didn't know you could short stock. You look back and you hear people like us talk on a podcast or in a conversation, or just think about if the recorded button is not being recorded, and listening to those conversations. It's an amazing journey. It really is. And to see you grow as a trader over the last 4.5 years has been extremely impressive.
Well, let's go back before that first event, though, because, at that point, and I do want to talk a little bit about after that as well, but what's your background? You grew up in Chicago, right?
That's right. Yeah.
And then you went to school, eventually to law school at USC, correct?
I went to law school at Tulane down in New Orleans, and then I went to business school at USC.
That's okay. That's interesting. Well, that's a very different, triangle of cultures right there. Chicago, New Orleans, Southern California.
Oh yes, you're hitting around the entire demographic there. I like it.
Right.
Yeah. So yeah. I got a question
about your education.
Yeah, I got a question. Steve, what is wrong with you that you wanted to go to law school?
When you're younger, you think you know what you want to do.
Yeah.
And then you start doing it and you realize it's very different sometimes. Than what you thought.
That's so true. I remember when I went to, as you know, I went to law school as well. And I remember growing up just a fan of Law and Order, and a fan of, like, my favorite movie of all time was A Few Good Men. And just loved it, just absolutely loved it. And that's what I saw law was, right? The rule of law and everything. Thomas Jefferson, my favorite American of all time, And I remember going to law school that first year, and I'm like looking around saying, this is not what I expected. This is not what I thought it was. And so I ultimately chose not to take the bar, and ultimately chose to go on a different path. But what about you? You graduated law school, and then you decided to go to business school?
Yeah, so what happened was when I was in law school, And I know exactly what you're talking about, man. I remember we call it, what the lingo is. Your first year student, you call yourself a 1L.
1L.
So when I was a 1L, I remember it would take me an hour just to read one page of the textbook, just because I didn't know what all the words were, and every other word you're looking up in Black's Law Dictionary, trying to figure out what they're talking about, and it was pretty grueling.
Contracts I hated that class.
That was tough.
Reading those contracts in that class, I got torts a little bit. I got some of the other classes a little bit, but contracts, reading that one page, literally, because you're right, you had to look up every single word. Which means I hate lawyers.
It was hard. So here's what my mindset was like. I went in just thinking I wanted to be a lawyer. Mm-hmm. And as I got my first taste of the law in law school, I felt like I was naturally drawn to the courtroom. I really wanted to be a trial attorney above anything and everything else. And so I geared myself towards there. And when it came out, I joined what I thought was the best law firm that I could get a job at. And after working, so I started in Illinois. I practiced in New York and New Jersey and in Chicago. And after we would do trial work, our clients would come back and they were happy with the work that we did, but they would ask us business questions. They would say, okay, well, what if I do X, Y, Z? What are the legal implications of doing that? So we would advise on that. And then the client would disappear, come back 6 months later, ask another question. We'd answer it, and same process over and over again. So after a while, I started getting more interested in the manner in which law intersects with business. Mm-hmm. And I wanted to learn a lot more about that. And I figured the only thing I knew was that profits were good, losses were bad, and that's about it. So I figured I'd go to business school, right? And learn a little bit more, and that's how I ended up at USC.
How long were you a practicing attorney in New York or New Jersey and Chicago?
About 4 or 5 years.
4 or 5 years. I had a lawyer. He had just graduated 2 years ago in one of my events just 2 weeks ago. It was a Rich Dad education event down in Phoenix. And he came up to me on one of the breaks and he said, Matt, I completely understand what you're saying out there. I completely understand because it's even worse now. A lot of what they do is kind of on just a contract basis. In what he's doing, and he just wants out so bad. And I just told him, I said, well, I have an out for you. It's you got to put some work in, you got to invest in yourself, and I know you can do it. So it's I see it everywhere. Lawyers they want an out. They just want an out. So you went to business school, and what year was it, if you don't mind me asking? You went to business school?
2002, and then I graduated in 2004.
Gotcha. And what from 2004 to 2010, you stayed in the LA area?
I did. So I got a job in solar energy, and at the time it was very small, and I just rode the wave up. Mm-hmm. So I started as a pretty entry level position at Sharp Electronics. Then as I proved myself, I moved up the ranks, and as of right now, I am the in-house counsel for a solar energy company. It's a solar installation company based out of San Diego, but I work out of my home office in LA.
Gotcha. Solar was booming from 2002 to really kind of 2008, coming in right before the subprime market. I remember one of my first stocks I used to trade, Steve, was First Solar. And that was, First Solar was one of my first stocks I was trading. Schlumberger was one of the first ones. One of the first ETFs I traded, I still remember, was OIH, the oil service holders and whatnot. Solar. I still like solar, by the way. I think solar might be having a little bit of a comeback.
All right, random question. I'm gonna cut in. I'm thinking about building a cabin, Steve, and I want it completely off the grid. Can solar do that for me in the mountains of Utah?
Yeah, what you need is obviously solar modules, then you'll need a battery bank. And more importantly, what you got to do ahead of time is figure out what are your critical loads, meaning what are the appliances that you want to make sure you have access to all the time. Mm-hmm. And then you determine how much energy each one of those appliances requires, add it up, and then you size the system to be big enough to handle that. And you got your battery bank in, and you draw the energy from there, and You'll be golden.
See, Steve, what Tim is actually talking about is he wants a compound in the mountains of Utah. And in the mountains of Utah, we call that polygamy. I'm just throwing it out there.
That's not true at all. Here's the thing you don't understand. Matt, most people don't know our jokes, so they'll take you literally.
Dude, if they want to take us literally, that's fine. I was at a Rich Dad training the other day, and I had like the Canadian group is down there, and they were asking me where I was from, and I said I'm from Utah, and they're like, well, are you a polygamist? And I said, come again? And they said, are you a polygamist? I said, well, does 3 wives count? You know, I mean, it's just, you got to play around with the ignorant people, man. You got to do it. You got to have fun at it. So, yes, I am joking. Tim only has 1 wife, but it certainly is a compound he's looking at.
You know that show on HBO, Big Love?
Yeah.
Yeah, I don't even remember the guy's name who was the lead actor in it. It was about polygamy in Utah and all that
Bill
stuff.
Paxton?
It was a dramatic series.
Is it Bill Paxton?
Yeah, Bill Paxton.
Yeah.
Best movie from Bill Paxton's Tombstone, by far, in my opinion. He was the brother. He was Wyatt Earp's brother. But,
yeah, okay, I'll go with it.
Yeah, no, my father-in-law hates that movie so much because it shines light even on the subject. A lot of Utahns, they just cringe whenever they hear the bad jokes in the media about Utah and polygamy. I think that it's just embarrassing for most of them because it's not really a big part of the culture here. At all. It hasn't been
part of the culture for over 130 years.
There's history there.
Well,
I don't want.
There's also history in the South for polygamy too, and I'm not. Listen, neither one of us are LDS, but at the same time, we were born and raised that way, and the LDS culture is a wonderful, beautiful culture. It's not a polygamous culture. It hasn't been for over a century.
You know, Steve, this is what Matt does. He tells people what my politics and my religion and my worldview are. Like, he always says stuff like that. Neither one of us are this. Are you a polygamist? He didn't even ask me. Maybe I am LDS, Matt, and I go to church every week, and you just don't know about it.
Are you hiding these things from me? Do you think I will judge you?
No.
I will not judge you. If you want to go back to church and, jump off cliffs and do that, that's fine.
Steve, I apologize.
Hey, Tim, you remember when I came up for the mentorship and I asked you, you don't seem like you act like a younger brother around Matt.
Oh, that's true, yeah.
First of all, we know that's not true.
I've actually had a lot of people over the years assume that I'm older than you, Matt.
It's because you look older.
I probably do, and I have an older soul and more wisdom, more life experience, so there's all those things too.
Do you really want to get into your life experience here on the podcast?
No,
if you want to
another
open up
time.
that
I'm changing back.
Box, okay, all right. Hatfield and McCoys, you got to check that out. That's Bill Paxton as well. It's a miniseries with Kevin Costner. Dude, loved it. It was good.
Oh, yeah, I saw that on the History Channel. Yeah, I mean, why can't the History Channel just be about history? Why does every network have to start doing these things?
No, Hatfield and McCoy, that's a true story, man.
Yeah, I saw that. Anyway, Steve, reset for a second. Let me think here.
Twister. What about Twister?
What am I most interested in with Steve? We're talking about some of your history, your background, your business education, your, going to law school, being a lawyer. In 2010, you first took that class, then you started down that road. What would you tell new traders about your experience that you think they should be able to learn from, or they need to be ready for certain things when they're in their first year?
Yeah, that's a great question. I think it boils down to what I was just talking about with my wife last night. And it seems like almost every person that I meet, when I tell them that I trade options, the gut reaction is, teach me. I want to learn. I really want to learn how to do this and learn how to generate money on my own. But so I would go so far as to say almost every single person wants to learn, but very few are willing to put the time and the effort and the dedication into climbing up that learning curve to learn it.
Or the money. It's I mean, like for example, yourself. You came through. Who's your trainer in 2002? Do you remember? 2010.
It was Scott Stewart.
Was it Scott? Yeah, we know Scott really well. Love Scott Stewart. So you sat with the training with Scott, and Steve, how much did you invest in your education?
It was about $25,000.
Okay, $25,000 plus you've done an extra mentorship, correct? So
right.
You're into this a good $35,000, correct?
Yeah, and then the continuing education through other sources as well. I'm definitely over 40,000, maybe 45,000 at this point.
Now, to a lot of people listening to the podcast, that seems like a tremendous amount of money. But looking at it now with what you're doing in the markets, looking at it what you've done in terms of your journey, and it's probably the same for us too. But doesn't it seem like that's fairly cheap in relationship to what you've actually gotten from it?
Yeah, it definitely is. I don't think of it as cheap. I think of it as well worth it. Mm-hmm. I think of my mindset now compared to what my mindset was back then. Tim, you probably know this. I got caught up in a real estate scam for my best friend. He milked me of a lot of my money, and I think when everything was all settled and done, I was out about $200,000.
Wow.
And so I think of my mindset back then versus my mindset right now, and it's just completely different. Mm-hmm. It's completely different, and that $45,000 allowed me to see the world so differently now, mm-hmm. and in a positive way. I'm a much happier and a much peaceful man now than I was back then.
I'm glad you said it that way. I want to just kind of throw my 2 cents in there. I actually think the most valuable thing I've learned as a trader, and this is going to sound cheesy and cliche, but it's actually about perspective. It's about being able to interpret what's happening out there in the world, see each new day as a new opportunity, instead of, always feeling like you're under the pressure, the heel of somebody else's grind, telling you what you have to do with your time. It has changed my perspective as a human being. I've always been a natural entrepreneur and wanting to go out there and do stuff and, willing to talk to people, but I never really understood how to put it all together until I started in the markets, and really not even even in the markets, but when I started reading Robert Kiyosaki and meeting other successful people. Steve, you're an example of one of the things I love about doing this business and our podcast is I get to network with people with all kinds of different backgrounds, mm-hmm. and learn from them as well as them. Hopefully they're learning something from me as well. I appreciated what you said about that.
Real quick, because
mm-hmm.
something Steve said struck me as well. He talked about he didn't have the proper mindset. And I think that's something that it took me a few years to really kind of shift that mindset. We started in 2005, but we were content guys. Just give me the detail. Kind of like just tell me the rule. I'll follow the rule. And it wasn't until really I delved into and jumped into that mindset of the rich dad mindset, the left side mindset, the poor mindset versus the rich dad mindset, the right side mindset. And part of that mindset is seeing the value of money for what it really is. And the value of money for what it really is just what you can use that to create more money or to get into more good debt, not bad debt, to really kind of see money for the value, and the value is just what it goes for, and that value is depreciating over time. So, when Steve said that, it just reminded me so much of my own kind of journey in terms of shifting that mindset. And now money, all money is, guys, is a tool. That's it. It's a tool of what you can use it for.
Now, Steve, I saw something really interesting. It may have been Facebook or Twitter or something, where a couple years ago, maybe a year ago, you had posted that with your trading profits, you paid off something significant to you. You want to talk about that for a minute?
Oh yeah, that was a great day. So let's go back to 2010 for my mindset. Mm-hmm. At the time, it was a difficult thing because I felt like salary-wise, I was making a very good salary, a very, very good salary. I was being compensated very well. But the problem is I had student loans that started out at being about $93,000, and the monthly payment was really, really high. At the same time, I had the real estate mess to go through, and I had some other things in my life. So it didn't matter how much I made. whatever was coming in was going out immediately. And it was very difficult. I remember at one time looking at my checking account and thinking, how is it possible that I'm making X amount of money, but yet I only have $500 in my checking account? Like, how is that possible? And all you had to do was look at the student loans and all these other things going on, and you would know that that's exactly why you have $500 in your account. So what happened was, as my trading picked up and the profits started coming in, it allowed me to be a lot more aggressive with paying off my student loans. And I think the post you're talking about, Tim, is the one where I had just clicked send on the internet. I send in my payments automatically over the internet or electronically. And it was the last one for my student loans. And it was a journey, man. It started in 2004. It was paid off 9 years later, and it was paid off really early. And it felt like somebody had just taken the handcuffs off of me. And it just felt so good to be free, and I was so happy. And I remember I posted on the Trading Justice discussion board that I was so grateful for everything that I learned through you and Matt and through Tigrant. It was an incredible experience. I would still be paying off those student loans now if I hadn't taken those classes back then.
You're listening to the Trading Justice podcast right now. Our guest today is Steve Huang, good friend of mine, an old student. As a mentor with Rich Dad Education, something I've done for a very long time, I had the opportunity to mentor Steve 2 different times. And Steve, that's a really, compelling story to me, and one that I wanted you to share, because I think if you're out there listening right now and you've never made a trade before, or maybe you've been trading for a year or two, you have to recognize that it doesn't always happen at the same moment for everybody. Steve, you were trading for a little bit of time before you found your groove. What do you attribute that transition towards success for? I mean, what happened in your journey that allowed you to become a successful, profitable, and consistent trader?
I think it's all about learning about your own personality and your own risk tolerance. So those two factors really define your style of trading. And so there were different systems that I looked at, and some were profitable. The one that you taught me, Tim, was very profitable, but it was very different from my personality. And so there's things about trading that you learn about yourself that you didn't know going in. And I found out for myself that I'm a very, very short-term type of trader. I don't like to be exposed for overnight risk unless I'm in a really, really safe position. That's the only time I'll take overnight risk. And so as I started to learn that, I began to embrace it. And at first I fought with it. I felt like I was heading down a path that I didn't want to head down. But then as I started playing with it more and more and wrestling with it, I realized at the end of the day, you know what? I'm really a day trader. I'm not a swing trader. I'm a day trader. I have that kind of mentality. And as I began to embrace that, coupled with that, with my risk tolerance and how I approach the markets, everything started to fall into place. And
hey Steve, can I take you back real quick?
Yep.
In terms of just defining a couple of these things, you talked about how Tim first taught you a certain system, and there's 4 types of traders. Well, there's more, but there's 4 basic types. You have day traders, swing traders, position traders, and investors. Investors invest long term, sell covered calls, capture dividend payments, and no, they are not in a 401k. You have position traders that work primarily, 1 to 2, 3 months in the options market, selling credit spreads and whatnot. You have swing traders that are defined as pivot to pivot, short-term traders, into a trade up to 2 weeks, and you have day traders. The first system that you kind of learned, and this is kind of an evolution we all have in terms of learning exactly who we are as a trader. Speak to that first system. Was it a swing trading system?
Yeah, it was a swing trading system. It's well, the first system was me just throwing trades out there, not really knowing what I was doing.
Mm-hmm. Yeah.
So that was, I guess if you could call that a system, it was not a good system. After I got disciplined by the market a few times pretty hardly, that's when I had my mentorship with Tim. And Tim taught me about position sizing, risk management, and so I was able to scale my risk and exposure significantly far back. And so what I ended up doing was selling a lot of credit spreads and naked puts, those types of trades. And I would take very small positions, and I would have a lot on. I would have at times 40 positions on, sometimes 36, sometimes even, I don't know if I ever got to 50, but it was a good number of systems, and I would manage it by the delta.
Was the swing trades, they were just all directional, and the other ones, the credit spreads, were like 1 month trades at first?
The swing trades were all, I didn't trade too much directionally. They were more credit spreads, but every now and then I would put on a directional trade.
Got it. And so
very rarely.
So basically you would manage delta, theta, vega.
Right.
That's the three most important numbers to that type of system. And that is a very, very standard, good system, high probability. But for one reason or another, it didn't work for you, not in terms of profit, not in terms of the system itself, but in terms of personality. And that's where you kind of shift in. So as you found out that was not exactly who you were as a trader, kind of what were the steps you took to really kind of hone in your skills?
So I went back for a second mentorship, and I flew back up to Utah, met with Tim. And Tim, I don't know if you even remember this at the time. It was right after the economic crisis when the Eurozone was going nuts. Yeah, and so
2011.
I could even just look at a chart at the SPX, and I could tell you exactly when I was going through what I was going through.
It was not just the Eurozone. If you remember, the government had some problem like coming up with a debt resolution, and in early August of that year, and in May we had the flash crash, and so market conditions were already a little bit on edge through the whole summer.
Well, that's also when quantitative easing 2 ended, was in June of that year. Greece default on August 7th of that year, Operation Twist August of that year, and then you had the dollar swap and all those other things. So you're talking massive market volatility in that time frame.
Right.
Well, I think this is really important for everybody to focus on this. So here's a time where Steve had been doing pretty well, and he started to feel like, okay, I've got this trading stuff going. I'm making progress. I'm making money, and then something happened in the market, Steve, that made you step back and realize I need more training.
Right.
And then you came out specifically to look for certain techniques, and maybe talk to everybody out there that's listening right now about your reaction to that, because that's not everybody's reaction. A lot of people, they put their tail between their legs and they kind of maybe stop trading for a couple months, or instead of going back for training, they just feel bad for themselves. Because in that August, the market disruption basically took all of your profit away for the year, didn't it?
Yeah, it did. It did. So the way I saw it was this. For me, that initial $25,000 investment was a lot of money. I have some friends that's not a big deal. For me, that's a lot of money. And I felt like I was in a position where I could not afford. In other words, I had to succeed. I had to make this work and find a way to make it work. So when it came down to going back to get the proper education, the first question I asked myself was, can I teach myself this? And I would look around, and I knew immediately my big problem was that I didn't really truly understand hedging. So that was what I had to go with. And I would look around on the internet and try to learn what I could, but it's one thing. It's kind of like learning how to ride a bicycle by reading a book. It's really difficult to do that. And so I knew I could only take myself so far. And if I was in a position where I had to succeed, and also knowing that I had a passion for what I was doing, it was a no-brainer. It was call up Tigrant and find out how much it is, and then just get up there and get professional advice, so that way I can go about this in a real professional manner rather than trying to guess and fumble my way around.
Is that moment, the August, when the market kind of, we're talking about the market went down about 18% in August. It was a big hit. And if you're primarily selling bull put spreads and iron condors and those types of trades, you're going to get hit hard if you're not hedged. You're absolutely right. Is that kind of the moment in time where you kind of made that? Maybe you didn't know exactly how to do it, but where you were talking about how now you're a day trader because you don't like to carry risk and whatnot. Is that kind of the moment in time where you decided that you decided to be something different, that you wanted to not carry risks overnight, those types of things?
It was almost that point. So when that happened, and it was wild because the market would crash down one week, and then it would spike up the following week, and then crash back down the following week, and it would just reverberate back and forth in a violent manner. Mm-hmm. And so it didn't matter which side I was on. If with an iron condor, it would come down and kill my bull puts, and it'd kill my bear calls. And worse yet, I had naked puts and naked calls, so I was getting crushed both ways. So it was not fun at all. My first thought was that I knew I had to learn how to hedge. But at that time, I started experimenting with day trading. And for some reason, I was just more successful day trading than I was with swing trading, even though I didn't really know what I was doing. And so, Tim, I don't know if you remember or not, but when I came out, I said I want to learn two things. I want to learn hedging. That's the most important thing. And then secondarily, I want to learn how to day trade. Mm-hmm. And when we sat together, I think we were in your car. We were going to get lunch, and you asked me, so you really want to get good at this day trading thing, huh? And I told you, no, I don't want to be a day trader. I really don't want to be a day trader at all. I don't like the idea of sitting in front of a screen for the whole day and grinding it out like that. But I said, I feel like it's a skill I need to learn because different environments present different situations. And I need to learn this to put some more tools in my toolbox.
Now that you've been day trading for quite a while now, Steve, is day trading anything like you thought it was going into that mentorship?
No, it's totally different.
Yeah, and the reason I wanted to bring it up is because when we talk about day trading, you just said exactly what most people think. I don't want to grind. I don't want to be in front of the computer 24 hours a day. I don't want to, that's not why I want to do it. And you try to explain to people that's not what day trading is, guys. And so talk about kind of what day trading is now to you.
So my mindset is this. My belief is that the time that your portfolio is at the greatest risk is when you're in the market. If you're out of the market, you have no risk. So the only time you have exposure is when you actually have a position on. So for me, when I day trade, I'm looking for specific patterns to develop. And these are patterns that, the stocks that I trade is a very short list, probably like less than 10 stocks. Over this year, I went back and I looked at my account, and I've placed trades only across 15 ticker symbols, and that's it.
What are some of the majority of the ones you're doing?
Chipotle, so CMG, Priceline, Google. I used to trade Apple a lot until it had the 7-for-1 split. Now it's not as good of a candidate for me. But Amazon, Tesla, Netflix. So they tend to be the higher price stocks.
Yeah, the high beta stocks, the credit based stocks, those types of stocks. Yeah, right. The two stocks that were in that category. Apple was a great credit stock for a long time. It is no longer a great credit stock. It's more of a directional type stock, maybe even a covered call stock, but it's not something we would be actively trading in terms of how you're trading. And then I don't know if you guys recall, but MasterCard, before it split 10-1, was a really good credit stock as well. And now I found myself, I haven't traded MasterCard in a year.
MasterCard was an interesting one. Very wide bid-ask spreads with the options, but it was really interesting. It gave some really great opportunities at the end of the day. And one of my favorite trades was with like about 15, 20 minutes before the market would close on expiration Friday, I would often see MasterCard consolidating, just going nowhere, going a little bit up, a little bit down. And I would just wait for a break. And I knew it was coming. It was just a matter of when. And when it broke, I would just sell a bull put if it was going up, a bear call if it was going down, right outside of that range, and just ride it down and let it expire worthless. And because of the wide bid-ask spread, sometimes I would get some really, really nice fills. Really nice fills compared to other stocks.
What type of, in terms of that, you're only holding that trade like 10 minutes into the close. What type of credit from an ROI standpoint could you get on something like that?
Sometimes, so I would do 5-point spreads, and so sometimes I'd get 35 cents. Sometimes, at one time, I got a 42-cent credit, which was very nice.
That's like
given
8%.
That amount of time. Usually, it's like 5 cents or 8 cents at that point.
Oh, that's like you get filled at 35, 40 cents on that. That's like 7-8% on your money in 10 minutes. That's a pretty awesome trade. No doubt. And now we can't do it because MasterCard is not that any longer. So come back to now your day trading. Let's talk specifically. Talk to me about, number one, your trading routine. How often do you trade? When do you trade? Before we actually get into the types of trades you make in terms of how you go about making your money. But what is your routine from a trading perspective?
Sure. So things have changed a little bit recently because I have a kid now. I've had to put less emphasis on day trading and more on swing trading. So the swing trading is just very, very far out of the money credit spreads or naked positions. There's not a whole lot of science to it. It's just being very safe.
Are you doing weeklies on that, or are you doing monthlies?
No, I tend to do crude oil. I like the leverage I get on the crude oil futures. So I'll trade the options on those. So I'll go out. The way I look at it is this. Traditionally, in my analysis, it takes crude oil about 2 to 3 months to make a 20-point move one way or another. And that's when it's crashing hard or moving up really hard. And so what I'll do is I'll go out and sell options, and I'll try to get outside of that 20-day window with a 30 to 45-day span. So sometimes I'll go up to 50, 55 days, but I want to make sure I'm outside of that 2 month, outside of that 20-point move.
Gotcha.
So with the crude oil futures, the leverage is so nice. You can actually get some pretty nice returns with it.
Good. What type of probability are you dealing with in those types of crude oil trades?
Those are only about like a 2 delta. That's about it.
2 deltas?
And so sometimes I'll get like, a lot of times I'll get like a 6 or 7 cent credit on that, which is
for those people
just for the benefit of the people out there. Yeah. It's not $6 or $7. You're looking at significantly more money.
Yeah,
because one contract is 1,000 units as opposed to 100 with futures options.
So in terms of that, though, Steve, when you say 2 deltas, for those of you that do not understand what delta tells us based on probability, what would your market-defined probability be on that type of trade?
About 98%.
98% probabilities, and the ROI on that, it's only a few cents, but you're controlling 1,000. So what type of ROI are you looking at for a 98% probability?
So usually you'll get, depending how close you are to expiration, but usually it'll be like the BPE that'll be held, the margin that'll be held is about 3,300 or 3,600. So if you take, let's take 600 divided by 3,300, and that'll be what your. Let me see. Let me pull up a calculator here.
Yeah, and why Steve pulls up a calculator because he can't divide 600 by 3,300. Realize this: you do not have to be a mathematician to figure out what 18% ROI is. And by the way, Steve, I had to pull up a calculator too. I just want to make sure it's simple math, guys. It really is. And
can I brag about myself for a second?
Yes.
I want to tell you something. When I was in 3rd grade, they put me in math class, and the teacher would be putting. I tell this story all the time, by the way. Most people hate having somebody else brag about themselves, but this is the one I'll do it on.
I embrace it, Tim.
The teacher would put up formulas on the board, and I think it was subtraction and addition at the time, and it was always like 2-digit numbers, like 55 plus 37. And here I am at 3rd grade, and I just start shouting out the answers, like before she could even basically finish, too much of the formula. And after about 10 minutes, she got tired of it. She grabbed me by the arm, she took me out in the hall, walked me up to the 4th grade math class, and told the teacher, "He's in your class." Just left me.
Oh, so you were Russell Crowe's inspiration for A Beautiful Mind.
Well, no, just in arithmetic. I don't even know if I passed some of the advanced, like trig and all that in high school.
I'll
Once
tell
I
you
got
right
into
now,
algebraic stuff, I didn't really like it.
I could not do my 6th grade. My daughter's going into 6th grade. I can't do her math.
Right.
If it has an A or B or C or an X or a Z in it, I'm done.
Right.
Check me out. And you know what? I've still survived being an adult without being able to do algebra.
Well, I still keep a calculator on my desk too.
Absolutely.
Makes it easy. Double check the numbers. But anyway,
well, let's get back to this trade real quick. So, Steve, kind of what you're looking at now is you're looking at basically selling put options on, the CL contract. That's the crude oil contract for the futures market. You're looking to sell options on that. Looking to sell that contract. You're selling 2 deltas, which is a 98% probability of cash flowing 18% ROIs. Correct?
That's right.
That is awesome.
Well, and I don't know, Matt, if you're picking up on the most important part of the entire thing so far. I didn't teach Steve how to do any of this stuff.
I know you didn't. You taught him how to sell put options on, indexes and stocks and
right.
That. I mean, I doubt you even in your mentorship. I don't think you probably even pulled up crude oil.
Well, maybe not, but I do know we talked a lot about different concepts. It brings me back as a teacher and a mentor to something I think about every time I go in and I sit with somebody. It's more important for me to teach proper mindset and put them on a path to where I know they can grow and succeed.
Well,
I get somebody in my office for 3 days. I'm not going to be able to teach them everything about the markets. That's not the point.
That's impossible.
So I have to do as much as I can to put them on a proper path. And Steve, I mean, you honestly, all of the credit in the world to you. This has nothing to do with me. You've put your time in and your due diligence, and you've done something that always impresses me in life, not just trading. You've adapted to the conditions around you.
Well, let me say one thing real quick, Steve, and then
sorry,
No, you're fine. I just want to say one thing, and then I'll go. I have a tendency to, make fun of Tim a lot. And Tim has a tendency to make fun of me a lot. That's what brothers do. But at the same time, Tim said something I completely 100% disagree with. He said, it's a testament to you, Steve, and I agree with that. It is a testament to you. Your mindset, your hard work, your dedication, it's amazing. It's beautiful. And I could not be more happy for you. But at the same time, there's a reason Steve decided to go buy another mentorship to fly out to Salt Lake City with you, Tim. And, in the evolution of every trader is they're different 2 years. Steve will be a different trader 2 years from now than he is today. And the same thing goes with us. We'll be a different trader 2 years because the markets will change. We will change. Our life experiences change. We get different responsibilities. And so teaching him the proper mindset and teaching him the proper techniques allowed Steve to go out there and say, okay, well, now I need to adjust when I have my baby. Now I need to go back out to swing trading, but now I have the proper foundation to do that.
Yeah, that's exactly it. Tim, you actually deserve a lot of the credit for that. To me, this is just a simple trade. You kind of take your guess at the direction and you gauge momentum and you move on and enter the trade and watch it mature. But the elements that I learned through you is all over this trade, and not only on this trade, but it's also through my Friday day trading as well. Mm-hmm. And it's just even though the actual instrument and ticker symbol is different, the concepts that you taught me it's inextricably intertwined. They're all over the place. So,
yeah, that's right.
Yeah.
And here's one concept I want to highlight again for everybody out there, the most important one: money and risk management. Steve, when you came back out for your second mentorship, you were specifically wanting to know about hedging. Explain to the audience, how you do control your own risk and how you make sure that you don't ever take an enormous kick in the shins, from the market. How do you control risk in your own trading?
So for me, it's the way what I learned from you that there's two different types of hedging. There's natural hedging and then there's forcible hedging. Natural hedging is when you're watching the market conditions and you're slowly adjusting your portfolio to match your market bias. Forcible hedging is more one of those like, oh my gosh, what happened moments. Like you just got hit across the head and you didn't see it coming. And then what do you do in those kind of situations? For me, even though I do these crude oil trades, I still think of myself basically as a day trader, because that's really what I'm best at. And so when I'm looking at the market while I'm day trading, I'm constantly shifting depending on what I'm seeing. And if I see the market starting to move very, very strong against me, it tells me to pay attention. And I start watching really closely for signals that I should get out or minimize my positions. And I have a rule of thumb when I day trade. If you get cold feet for any reason, as long as it's a real reason, not just because you're getting scared, but if you have a legitimate reason to be concerned, then just cut your position in half immediately. And to me, that in and of itself is a form of hedging as well. You're reducing your risk. And the whole point when I trade is I want to make sure that I never take a huge hit on any given day, because I've had one day like that before in my past, and it was not fun at all. And I decided I'm never going to let that happen to me again. And so that's what I do with hedging. Now, there's other forms of hedging when I'm unsure and I'm thinking that it's moving against me, but I'm not really sure where it's going to go, but I know I don't want to take a big hit. Then I'll come in and I'll counterbalance my delta. So if I've got like negative 600 delta, I'll put on positive 600 delta to make sure that I buy myself some time until the market figures out where it goes. And then I'll take off the hedge when I don't need it anymore.
Very interesting. I'm thinking about something that's come up with me recently. I had a young man, and Steve, you can tell me the advice you'd give this person. I haven't found the right way to get him to embrace mindset. I had a young man recently contact me, and I'm a young man, so I'll embrace that too. He lives out of the United States, and he trades Forex. And he's trying to learn how to trade Forex, and he's a very emotional trader. It's the simplest way I can put it. I mean, I've been doing this a long time. I can spot it a million miles away. And he's a very up and down emotional trader. I think he reads charts pretty well. He's shown me some of his entry points. He's a day trader, but he has no concept of money management.
If it's the guy I'm thinking about, he should not be day trading yet. He doesn't understand the Forex market cycle. And Tim, you should tell him he shouldn't be day trading. And I'm going to tell him on the podcast right now, if he's listening, because I think he does listen to the podcast, he should not be day trading until he masters the Forex market cycle. There's a specific cycle. And I was asking him, and again, I might not be thinking about the same person, but I asked him on Facebook the other day if he understood what a bank open trade was, or what a news-based trade was, or any of these trades, or what a carry trade was. He didn't know what any of them were, T.
Yeah, well, and I understand, you need training and you should be practicing. And when we say, you should be trading, we're not saying virtual or anything.
No, go lose all your money virtually. I mean, that's
right,
fine.
You need to practice. But even once you do get a technique down, Matt, you can have the greatest technique in the world. You can be the best chartist in the entire state you live in. Mm-hmm. If you can't money manage, you will lose.
Money management is much more important than chart reading. But I'll tell you this, and just to kind of call it, he told me he watched one on-demand class, and that's how he learned how to trade currencies. And he says, well, it's not working, so obviously this trading system doesn't work. And Steve, what would you say to that if somebody tells you that?
I think there's a lot more to learn.
Yes.
Yeah.
I feel bad for him. He's a young kid. Have some perspective, and that's what I'd say too. You're young, have some perspective. Get out there and virtual trade for a year. Get out there. I mean, the old-time traders, guys, that's what they had to do. They had to go out there and they had to paper trade for a very long time. They had to lose their money and learn how to trade that way. That's not what you have to do anymore. You can get out there and you can virtual trade. You can get out there and you can learn what a news-based trade is, what an economic event and how it impacts the currency. So, I want to help him because he has a desire, right? He has a desire, but at the same time, you can only lead the horse to water, buddy. You can't force it to drink.
Well, and we all have our own journey, and that's what we're doing here at the Trading Justice Podcast, and we want to help people with that journey, but it's not going to be a straight line of success. And one thing it brings up, Matt, just kind of random thought on this. it brings up the idea that when you're new to trading, you should, even if your whole desire is to have it be your full income, full career, you should probably keep a second or third income. Mm-hmm. One thing about being an entrepreneur and really embracing the trading spirit, most traders they're doing something else too, and it's not because trading can't offer enough. It's because of the inconsistency
and it's also,
of profitability.
It's also because of what happens on August 7, 2011, and it blows up Steve's gains for the year. And Steve, I say that, but I'll tell you right now, I had the best month of my year in August of that year. I had the best month of my year in September. I was on fire. But you know what?
Oh, my.
The market broke out in October of that year, and I was still doing the same things that I was doing in August and September, and was too slow to react and gave up all of my gains in August and September and October. So I feel your pain. I feel your pain. But I was pinpoint on that. I was put options on the S&P 500 when the market broke on August 7th. So, I remember the date very well.
Let's have Steve talk about this for a second. I think he can offer a very unique perspective because, Steve, you've done well with trading. I think you understand the markets pretty well. And, you're a good trader, you're a profitable trader, and you've been doing it now for 4.5 years. What advice would you give somebody who hasn't really seen success yet when they come to you and they said, I want to be a professional trader and only do this, and I'm going to quit my job and I'm going to just do this? What would you tell that person?
I'd say don't quit your job yet. You're probably not going to be very good right out of the foxhole. So keep your job. Start practicing first. I would tell them the most important thing is two things. First is have the right mentality, and what I mean by that is approach it like you're learning a new skill. Like when you want to become an accountant, you have to learn accounting, mm-hmm. and you got to take classes about it and take it very, very seriously and invest in your education to become the best accountant you could be. Take it with that kind of mindset. I remember, Matt, when I walked in to your class in Anaheim just mm-hmm. about a month ago to say hi to you, you were talking about the naked put, mm-hmm. and it brought back memories where I was up until 2 to 3 a.m. in the morning trying to wrap my head around a naked put.
Oh, wow.
And my girlfriend at the time was getting annoyed with me, saying, "Why are you up so late? Come to bed. What's wrong with you?" And, it's that kind of dedication to really approach it with a certain level of tenacity, so that way you can really, really learn this in a very serious and professional manner. That's mm-hmm. the first thing. The second thing is get a mentor. There's only so far you can go on your own, unless you're a prodigy, But most people aren't prodigies, so get a mentor, and not just any mentor. I would say interview whoever you identify as a potential mentor, and really make sure your personality matches that person's mm-hmm. personality. And once you find that person, then go with that person and try to learn as much as you can from them.
Honestly, Steve, I've taught thousands and thousands of people, and some in that training that you came out. And by the way, it's so awesome to see you in person. That was Steve didn't say this, but that was the first time we'd actually had the chance to meet in person. We'd talked on the phone tons of times. We'd emailed each other tons of times, but we never had a chance to actually meet in person. And Tim Steve was kind enough to come out to my training on day 2 there in Anaheim. And he walked in and he kind of just sneaked in the back, didn't want to interrupt, but I saw him. And Steve, I shut down the training, didn't I? I said, I shut the training down, and I said, "Wait a second, hold on. I got to bring Steve up here. Steve, come on up here." And I think he was a little taken aback that I shut down the training and brought him up. But, shouldn't be too shocked. That's kind of what I do. But it was awesome, Steve. It was absolutely awesome. And one of the things that, I feel so blessed as a trainer for Rich Dad is to get to be able to not only meet, but befriend and to create the long-term relationships with people like Steve, people like Dean Beckett, that, have grown, who've gone through the fire, dedicated themselves, and really treat the art of trading the same way you and I have, Tim, for years. Just dug into it, and I love what Steve said earlier. Steve says, you know what? There was no other way. I had to make it successful. I had to, and it reminded me of the story of Cortez, when Cortez landed his ships from Spain here in the Western Hemisphere, and everybody was complaining of a storm and wanted to go home, and they were sick. And Steve and Tim, what did Cortez do, if you recall the story?
Burned his ships.
He burned his ships, and he burned the ships, and he said, well, there's only one way but forward. And so that's kind of what Steve did with that second mentorship. He said, you know what, I got to do this. I have to do this. I don't care what it takes. Let's move forward. And that's the successful mindset right there. And that's the difference between, Steve and the other 95% of the world that wants financial freedom, is Steve was willing to do whatever it took. Whatever time it took. Like you said, being up till 2 o'clock in the morning. My wife gets very upset at me sometimes, Steve, when I'm in my office at 2 o'clock in the morning looking at charts. But you know what? That's me. I don't have the mindset to shut it down. And once you've found success, you just want to replicate it. And by the way, I checked your numbers on the crude oil futures contract in October, and Tim, 2 deltas, selling the 82 October, 32 days out. $600 profit, $3,300 buying power effect for an 18% rate of return.
Unbelievable. And the thing about oil,
right now,
it has natural demand to the commodity. Yeah. So it's different than trading a stock, because there's a natural floor built into the futures contracts and things.
Honestly, let's say, 98% probability on that trade. Now, we're just dealing with one contract, all right? So one contract. You can do 5 contracts, 10 contracts, whatever it is. Let's just talk about one contract. Over a 12-month span, at 98% probability, you can cash flow a grand total of 216% ROI.
Incredible, yeah. And here's something.
98% probability, Tim. I'm floored.
It's unbelievable, and I'm just going to give one little bit of advice to new traders out there.
Sell a 2 delta on crude oil.
When you're doing trades like that, it may not feel exciting.
It's paint drying.
Right. Just stay bored. It's okay. I had a trader come to me once, and he said, Tim, this stuff is working, but it's really boring. I want to try something more exciting.
And you wanted to punch him in the face?
No, I said, why don't you pick up fishing or golf or something? Just stay bored while you trade. You can do something exciting with your spare time.
You should have punched him in the face and told him, I just saved you a lot of heartache when the market turns on you, when you're directional.
Matt, I've never hit anybody in my life.
You haven't?
Never. I've never had a fight where I've struck somebody in the face.
I've had a couple.
Yeah, Steve, you ever been in a fist fight?
Oh yeah, I had a lot when I was.
Well, he's from Chicago, man. Yeah, he grew up in Chicago.
Well, let me say this: I have been punched in the face a few times.
You have not been punched as much as you deserve, though.
No, I'm a nice guy, man. Don't start painting me in a bad light.
You were the mouthy little SOB growing up that had the big boys around him and surrounded yourself with all the football players, and so nobody ever picked on you because you had all the friends that were really, really strong.
What are you talking about?
I get it. I understand this. Okay. Anyways, I want to come back to this crude trade real quick.
Well, hold on a sec. You're going to make it all nostalgic. It's Saturday afternoon in August, and we're looking at football season starting, right? Now, I want you to think about this.
I just want to talk about this crude trade. I love this crude trade. This is ridiculous.
If you had to guess on one record I would have set as a football player in high school, Matt, what would you say it would be?
Unsportsmanlike conduct.
I had the most penalty flags on our team.
Knew it. Steve, Tim also got booted from 9th grade football. Got suspended for the year.
Oh, yeah, stop.
I want to tell why.
No.
You want to know why, Steve?
What a life lesson that was.
Tim and his buddy Aaron, whom we both still are friends with and know for a very long time, they decided to break into the junior high, into the candy room, and steal candy bars from the junior high when he was in 9th grade. Tim was a little bit of a hellion growing up. And
Thanks, Matt.
He got busted, and because he got busted, he got suspended for the entire year for stealing a Snickers candy bar. I'm not kidding.
You don't even have the story right.
It's
You're
close.
Tell the story.
Well, you want to tell it. I had to make up stuff.
we borrowed the principal's keys.
Oh, yeah, that's true. That's true. You borrowed, quote unquote.
And we didn't steal any candy bars. That was the intent. But we did not. We just happened to have the set of keys, and we got busted with them. And we got suspended. And my favorite part of the story is not any of that, because I learned a life lesson there. And all that, because I'm a 15-year-old kid. But was that my dad, as a punishment, tried to make me go out for the cross-country team, Steve.
Yeah, that's right. I remember
so that instead of going home in the afternoons and be able to watch Batman and cartoons and hang out, I had to go out and run 3 miles every day.
Oh, my.
Yeah.
And the school board had a huge meeting and debate.
They threw a fit over this, Steve.
Yes, because
Tim Justice getting preferable treatment because blah blah blah. Yeah. And it was the funniest part about it is my dad was just trying to punish him. I mean, literally, my dad was a disciplinarian growing up, Steve. He was not. He was, he's a great guy, but he would put us in our place if we deserved it. And he was trying to punish Tim for going out cross country, and they literally had a special board meeting to handle this. There was write-ups in the Emory County Progress. I still remember this. It was huge controversy that Tim got to go run 3 miles a day.
That wasn't even my best 5 minutes of fame, by the way. Matt, did you know I was on the TV news when I was 17?
I did. Tell the story. Come on.
Sorry, Steve. We're not going to be longer. But anyway, so Bill Clinton was the president at the time, and they had picked our county and our canyon, the canyon Steve, I grew up going up and hunting in.
Before you go on this, realize, Steve, that we are from a very small community in Huntington, Emory County, Utah, and you're born Republican and you die Republican. And when I say that, I'm not talking conservative. I'm talking Republican.
Dyed-in-the-wool Republican.
Yes.
Yeah, but anyway, that's politics another time. But I'm up in the canyon, and all these TV crews are doing this nice.
You're so scared right now. You're so scared because you were a little crude last night on the podcast, and now you're trying to be a good boy. Knock it off.
I guess what I'm going to have to do with you is teach you how to have a conversation.
Not going to happen today.
I say something, you wait until I'm done, and then you respond.
I'm not going to.
There's supposed to be natural breaks in between when people are talking. Do you understand this, Matt?
No, I'm not going to let you get away with saying stuff like, "Well, politics for another time," religion for another time. No,
it would take our podcast. It would take us 20 minutes. I'm not trying to dodge Republican politics.
I think
people pretty well know I'm not Republican.
Dodging.
What I'm saying is,
there's nothing wrong with Republicans, by the way. I don't know why you would say anything endangering against Republicans. Republicans are great people.
Holy shit! I'm not even following your logic now.
I'm just saying, you have a lot of friends that listen to this podcast, and you're going to have to deal with Aaron later on.
Oh, I have no problem. Believe me, I have no problem dealing with him.
All right, tell your story.
It's not even that good of a story. We just talked for 20 minutes about it. I was up in the canyon, and I was mad that Bill Clinton got to take one of our trees to the White House and make it the White House Christmas tree, Steve. And so all the TV cameras are up there doing this fluff piece, and it's going to be on the news for Utah, the president's here, and it's going to be the White House Christmas tree. And I go step in front of all the cameras while they're doing, because I was like a political kid, while they're doing their broadcast, and I have a T-shirt "No to Clinton" or something like that. I can't even remember. And I'm like, I don't think it's very cool that he can steal all of our land and make everything a wilderness area. He had just done some grand staircase thing.
Took our tree.
And yet he still wants to steal our trees. I thought wilderness was sacred. That tree should be left in the ground. I mean, really a ridiculous argument. It wasn't my finest moment in logic or reason.
Really quite dumb, actually. But you did get on the camera. You were that guy.
Yeah, it was funny. I had people pat me on the back. Matt, a lot of the people, I would have elderly people in our community, and they would come and say, "You're a good boy, Tim."
Yeah, proud of you, Tim. Way to represent Huntington, Utah. Way to represent Utah.
You tell that Clinton what you think of him.
Yeah, there was and Steve, back then they were making basically some of the land here BLM was taking it, and you couldn't drive four-wheelers on it, and you couldn't camp on it, and stuff like that. So it was a big controversy back in the late 90s, mid 90s about the U.S. government kind of privatizing some of the land, and so when they took the Christmas tree, we don't get too much things to complain about in Huntington, Utah, so that gave Tim an opportunity to complain about the U.S. government.
I love the story.
Oh, it was fantastic. It's fantastic. Yeah. Made yourself feel better.
Oh goodness,
Steve I still want to talk about this crude oil trade. I'm going to start trading this like every month. I haven't been doing it. I don't sell crude oil contracts. This is ridiculous.
I wonder have you priced it out for gold as well, other commodities, Steve?
I thought about it with gold, but gold is a little too volatile for me. And
what about the E-mini?
Yeah, E-mini too. I don't know. I haven't tried it with the E-mini, so I don't know. Maybe it will work. The thing I like about crude oil though is you have some really clearly defined highs and clearly defined lows, and you've got options with credits on them that are way outside of those boundaries.
On the E-mini, it's max profit 600, similar on crude, but the buying power effect per contract 7,000.
Double, huh?
Yeah.
Yeah.
Same probability, half the return. And what I like about what you're saying there, Steve, is you have this cycle to crude down, in terms of how far it will move in terms of its monthly, bi-monthly movements.
Right. It's for me. It's with the baby now. It's really, really hard for me to get really stressed out. So I knew the baby was coming, and starting last year, actually, I was starting to experiment with this, and it got to the point where I feel pretty comfortable with it now. Mm-hmm. And so it's good timing too, because the whole idea was I knew I would have to. I still day trade, but I won't be able to hit it as hard as I used to. Mm-hmm. And this transition is coming at a perfect time.
Now, in terms of that crude oil contract, what is is it typically you're about 30 days out you're selling?
No, I like to go 30 days is kind of close. So my system is I'll come in less than 60 days. I prefer to be around 45 to 50 days. Sometimes I'll go up to 55 or 57 days. But the idea is to go about 60 days out. And the idea there is, like I was saying, it usually takes about 2 to 3 months for crude oil to move 20 points. So with that 60-day, with a window that's slightly less than 60 days, I'll try to get 20 points out.
Okay, so it's not so much your capture and the rate of return on theta or anything like that. It's basically the most important aspect is you're outside that 20-point movement.
Right, because gotcha. I don't want a whole lot of stress with these kind of trades. Well, and then what I'll do is, so my initial position, and Tim, this is what I was talking about earlier when I said your fingerprints are all over this. I'll start out with a fairly small position. And so I'll come in with that amount because at that point, I feel like I'm at the greatest risk. I don't know if the market's going to confirm what I think that it's doing, or is it just going to turn around and whip the other direction. So I'll come in with a smaller position. As the trade moves, if it moves in my direction, then I'll start scaling in and putting more and more contracts on. And the beauty of it, one thing I really, really love, and I see this in day trading too, is sometimes you'll get skews in the option chain. So let's say I have like the September options that expired yesterday. I had a bunch of naked calls on it. Sometimes even though the crude oil is moving in your direction, you'll get a blip on a higher priced, a higher strike that'll give you a greater credit than you initially entered in at a lower strike.
Very interesting.
And to me, that's less risk for more money. So I'll gobble those up. I'll take those.
I think the point has to be made again And by the way, everybody, you're listening to the Trading Justice podcast. I love doing the plugs, Matt. It's one of my favorite things. You can find us on iTunes. You can find us on tradingjustice.com. We always put them up on tackletrading.com too, as we try to build an audience and get you guys involved with us. And we're talking to Steve Huang today, trader extraordinaire, wonderful person, Chicago Bears fan. And Steve, you bring up a very good point here, and it just brings me back to something we touched on earlier, and I just want to just preach this message to people out there. Guys, when you're new, focus on laying a foundation of principles that will take you through any market condition, and those things are like mindset, routine, probability, time decay,
system,
learning the intraday market, and having a system. Now that system will change. Steve himself has talked today about how he's adapted and changed at different points in his life. Having a new son has forced him to change some of his routines. Now, so if you become overly reliant on only doing one thing in trading, you're limiting yourself. And money management is a critical part of that. And I love what you're talking about there, Steve, about layering in and scaling out. I'll tell you, it just it takes me back to my own journey as a trader and learning how to be patient and build positions in. We talked last night about technical analysis a little bit, and Gino asked me a question. Oh, why did you decide to trade that? And I'm like, I don't know. I don't usually make the charts. I don't make them too complicated. Just look like a good bullish position. I found a good entry point. I took it. And talk a little bit about entry points and timing to me here. On the scale of importance to you, it's probably up there somewhere in there in terms of important, but maybe kind of explain to the listener out there how you've evolved over the years in finding when to trade and how it fits in your overall trading.
Yeah, so when I first started trading, it was looking at the trend and looking at various patterns and is it bullish or is it bearish? And if it's bullish, then put on a bullish trade. Is it bearish? Put on a bearish trade. Things have changed since then. Now I try to catch the breaks. And what I mean by breaks are when the pivot points, pretty much. Like when it's right about to break out or right when it has broken out. I like to grab it right then. And it goes back to what I was saying earlier. To me, the time that you're at greatest risk is when you're in the market and you have money at play. If you have no money at play, then you're not at risk. So to me, that's the most tenuous time of the trade because you don't know. You don't know if that trend is really going to continue. You can only go based on the information you have in front of you, but no one can tell the future. With that said, to me, that's not the most important trade, though. To me, it's what happens after that. So in order to make money, my mindset is you have to risk money. So I'm willing to risk money, but I'm not really willing to risk a whole lot. So I'll take a smaller position initially. If the market continues to confirm with my hypothesis, then I'll start coming in and being a lot more aggressive. So I hope that answers your question, Tim. I'm not sure if that's what you were getting at.
Yeah, no, absolutely. Yeah. And I have a way of thinking about this, because I teach a lot of beginners, and I love doing that. I think that most people come in, and Matt, you can touch on this, and I think we need to wrap here in a little bit, but I want to kind of close on a few things. A lot of people come into trading, and they have this instinct that finding the entry point will be the most important thing to their success. That if they can learn how to find good entry points. But Steve, think about what you've been talking about all day. It's adjusting, hedging, managing, adding to positions, understanding
position sizing, all that, yeah.
Entry points, Matt, it's important. You have to read a chart well. You have to learn technical analysis.
Entry points can get you to have a higher percent ROI at the end of the day. They can help you make sure that you're placing stop losses above resistance, below support levels. But the number one rule of trading is not to make money, guys. It's to protect your money. And that's what Steve has been talking about for an hour now. is basically position size, risk, position size. I didn't want to carry the risk overnight because of what had happened, and all that jazz. So, I hope what people are taking out of this conversation is a couple things. Number one is that, and it's something that every one of us here will say, everybody can learn how to trade. Everybody can. If you have the dedication, the desire, and you're willing to learn, you can learn how to trade, and you can learn how to trade successfully. Steve had a very traditional upbringing in terms of his school. Well, Steve, guess what? So did I. Very traditional. Poli-sci, history, law. That was mine. And now, we're sitting here, 10 years after I graduated, 10 years after you graduated, and we're talking about, selling contracts on crude oil. And over the last, while you guys have been talking the last 5 minutes, I've went through the last 2 years on the crude oil contract to determine the average monthly movement and the average 2-month movements. And the average monthly movement is typically between 5 and 7 points. The average 2-month movement, the lowest it's moved is 5 points. The highest it's moved is 17 points.
I love it.
Not once in the last 2 years has crude went 20 points. And right now you can sell the crude oil contract for October, get $700 on $3,200 buying power per contract.
See what Matt just did there, guys? He went back instantly, heard an idea, and he's like, I'm going to go back and I'm going to assess volatility so I can determine proper strike price choice, build a plan around this. I mean, that's what traders do.
Well,
you always got to keep your brain on.
It wasn't because I wanted to make sure Steve was being accurate. Why would I do this?
Opportunity.
I want to do it.
Yeah.
I want to put this. This is awesome. I want to put it part of my repertoire.
And here's something Steve and I have talked about in the past, and then let's wrap this. I got a busy Saturday, Matt.
You going to Home Depot?
Gonna hit the Home Depot.
Good.
Yeah,
Good.
And actually, I'm doing something today. I'm gonna go grocery shopping, and I'm gonna make like 6 meals, and then Tupperware them in my fridge for the week. And I'm just
I like it. Doing some casserole.
Well, I'm gonna do 3 soups. I'm gonna do a chili, a curry. I'm going to do
you doing white
some
chicken?
other kind of soup.
You're doing a hearty chicky, little tomato base, or you're doing the white chicken?
White chicken's not really chili.
It is chili.
The
Have
white
you had
beans
my
and
white
white
chicken?
sauce.
My white chicken chili is the most delicious thing you'll ever taste in the history of mankind.
Okay, what chilies are in there?
Chilies, dude. I don't just do the white chicken. I do all the peppers.
All right,
I throw the tomatoes in it, man. I
you
do
gotta
a
have
combo.
tomato base to be a chili. I'm sorry.
Dude, my white chicken is better than your tomato. I'll tell you that right now.
I'm not saying it's not delicious. It's just
it's a chili,
casserole.
man. No, it is. That is not a casserole. That's not even close to what a casserole is. Where did you grow up?
Oh, all right. Goodness. Anyway, so what? I remember my thought, but we were talking. Somebody reminded me where my thought was. I had a really good thing to talk to Steve about. We were going to wrap it up. We were talking about position sizing, risk, oil.
Steve, I want to ask you a question.
I'll think about it.
Yeah, I had to save you on that one. Steve, somebody who's starting out new and considering taking the journey to be a trader, take control of their financial future, what would you suggest to them? What would the advice be to them?
Well, my advice is really ask how serious you are about this. Like, take a hard look and really ask yourself that question. Is this a hobby or is this something you really, really want? Mm-hmm. And if it's if it's a hobby, then your results are probably going to be commensurate to what somebody does as a hobby. Mm-hmm. Maybe you'll be good, maybe you'll be bad, and who knows? It'll be kind of a fun thing, or maybe it's not fun. But if you got to have the right mentality and approach it like this is serious, like it's going down right now. Well, that's the first thing. But then the second thing is equally important to that, regardless if it's a hobby or not, or what you're doing. It's control your risk.
Yeah. Awesome.
At all times.
Awesome. It's talking about the hobby versus the business perspective. Guys, golf is a hobby. Okay? Fishing, a hobby. Biking, a hobby. Trading in the financial markets where we're dealing with money, this is a competitive business. And you have to treat it as such. And I think that's what Steve is saying. Because if you don't, it's going to treat you like a hobby and you're going to be a hack. And you don't want to be a hack. Be a pro. All right. Steve, final words. Say goodbye.
Thanks for having me. This was a lot of fun.
Awesome. This will not be the last time you are on the Trading Justice podcast, by the way. You are going to be one of our recurring guests because I had an absolute ball today. Thought it was a great conversation. Steve, I love what you've done in terms of your trading career. I love just hearing the evolution of you as a trader from your background before you were a trader to, going to Scott Stewart's training to, going through the classes to mentoring with Tim, really the evolution. And that's what really kind of I gravitated to, is just specifically to the evolution that you've had as a trader. And it's been a fascinating conversation, Steve. So I thank you so much for coming on to the Trading Justice podcast and sharing that story with everybody. I'm absolutely certain people will get a tremendous amount out of that. Tim, parting thoughts?
Yeah, just weekend newsletter tomorrow night. If you guys aren't reading that, check us out at tradingjustice.com or tackletrading.com. Also like us on Facebook. Hit me up on Twitter at TimJusticeUtah. And other than that, just enjoy the rest of your weekend. Steve, you the man. Go Bears.
Thank you.
We'll have to talk Chicago Bears here soon.
I got to drop a couple things real quick. Yes, you can follow myself at MattJustice13 on Twitter. Like us on Facebook, the Trading Justice Facebook page. Also, if you like the podcast, log into iTunes, give us a nice little 5-star rating. It just makes us feel all warm and fuzzy about the time we're putting into this. So, like us in iTunes as well. Tell your friends about it. Let's get this nice little pirate ship afloat out there. Thanks,
Steve,
everybody.
You picked our song.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.